What is up, everybody? Happy Monday morning. I hope you had a fantastic and restful weekend. God knows Austin and myself and a lot of the rest of us winners needed it because last week was Siskel and Ebert called it a rollicking good time and gave it 2 thumbs up. Winners win was a success and was a huge amount of fun. My name is Sean Grapevine. I'm the director of Agent Direct. I am a leader of Agent Connect, and I am a student of the markets here for 17 minutes every Monday morning. And I am joined this week, as with most weeks, by the Mac of the rate stack, the guy who has bips for breakfast. He does best effort with no efforts. He's the Lord of the Locks. He's the Sultan of SLAs, the Baron of bips. Needing only to keep his core warm, the Viceroy of Vests maneuvers expertly about, arms flailing, locking loans, and signing on new lenders at lightning speed. He's the king of collateralized debt, the colossus of credit. He is the Stone Cold Steve Austin Koenig. Welcome, Austin.
Thanks, Sean. Thanks, Sean. Was that improvised right at the end with the Stone Cold?
No, that was the new nickname I had mentioned in the green room while we were
There we
enjoying our
go.
champagne.
Yes, yes, yeah. Well, that was a great week at Winners Win. It was good to see you there in person, of course, but as with everyone, to get to meet some new faces across the board. Really get to reconnect with a lot of people that obviously we do business with at either UWM or just all throughout the organization, right? So it was an
Yeah.
awesome time, and we had a great time out there, but much needed weekend. But a lot of things happened in the market, whether we were in Michigan or not last week. It was a pretty
I know
crazy week.
we should hold these events every week if that's what's going to happen. So yeah, let's go over last week. We had a big news item that didn't make a huge amount of difference in rates, and then we had a small news item that appears to have made a big amount of difference in rates. I mean, you can connect me if I'm wrong. That's my understanding. So we'll go over the two news items I'm talking about are the Fed uh, board met and elected to not raise interest rates, and then they mentioned sort of side thing that they were going to decrease the number of treasuries made available or decrease the number of treasuries made available at auction. And it seems to have an outsized effect on the market's reaction. Is that right?
Yeah, so whenever you kind of decreasing supply, if demand keeps constant, right, that's going to help prices. And so whenever we help the prices of treasury, the way that looks to us is rates are coming down, right? So that's one thing to keep in mind. Think about like this too. How did the Fed, make or print money? What they did was they buy bonds, and they were the biggest investor in bonds in the market, and that drives prices up and then keeps rates down. So kind of whenever you have a decrease in supply of issued treasuries, it's going to have that pricing action. Either way, though, like if we just look at the straight up headlines, we didn't have a Fed hike rates, and there's still a chance of that happening, but through the rhetoric we've seen, and most people did not think there was going to be a hike. They haven't ruled it out like this. There's no more hikes forever, or anything like
Right.
that. They, they
Mhm.
they still have it on the table, of course, but I think what we're seeing here is the data that's coming in after the Fed met, is really helping push narrative of okay, they are probably done, and it's just a matter of how much or how high is higher for longer, in theory. So we saw initial jobless claims finally be worse than expectations.
Yeah, that's true too.
So that was good on Thursday, and then also on Friday we obviously had our big headline job number. Everyone should always pay attention to that one. That's the big one right there, and that was actually worse than expectations as well. We saw some revisions from the last month that was super good. We were revisions down as well. We saw unemployment take up to 3.9%. Um,
Yay.
so that's something that we're wanting to see on the rate side is kind of these weaker job market numbers flow into the data finally, and we're
Mhm.
seeing it we're seeing it come to fruition. We don't have anything to talk about, especially early on this week. And in fact, this week has like a really light
I know. I'm looking at
data.
the calendar right now. I mean, we got a couple Fed folks, Fed
Mhm.
boys chatting with the media, and then we got that's it. The initial jobless claims.
Yeah, and we have some expectation things, but those are, you know, when those are driving the market, it's, the market's not the market's not having too much participation, I would say. Everyone's kind of gonna be grasping at straws. And the thing is with the Fed speaker speaking, it's going to be good to hear from them, but their comments are going to be scrutinized quite heavily by the market, nonetheless. So, you know, we were saying this when we're at Winners Win as well. Like this, the knee-jerk reaction to the jobs report is great and all. That was we're seeing it kind of retrace a little bit of steps here.
Mhm,
Friday
mhm.
was a great data lock. Today's still a great data lock. At the end of the day, we've seen the 10-year go up from levels like this before. In fact, this is not even really if we look a month back from now, it's not really even that great of a
Right,
10-year.
right. Yeah,
So at the end of the day, definitely like it, lock it. If anything, any of these comments could probably push rates higher. I wouldn't say there's a huge amount of room downward until we actually see real progress from the Fed of saying, okay, we are done cutting rates, and it's just a matter, well, done hiking rates, sorry, and it's just a matter of time before there might be a cut, but we're just going to keep it consistent here. The market will react very positively once they get that final declaration, and obviously the Fed's probably not willing to give that, you know, handout
for
to the
a
market.
few, yeah, for a few cycles. Yeah, I would assume.
Hmm.
We got a big CPI reading next Tuesday.
Yep.
So we'll next week we'll chat about some of the expectations around that. But yeah, I mean, yeah, we we've definitely seen plenty of the trend. It seems to be melt up is the direction rates
Hmm.
go in the absence of news over the last year to 2 years. Is like if nothing's happening, expect a few bips worsening each day until you're at back in the nosebleeds. But certainly, yeah. I'm looking at the historical data here. Uh, we are celebrating being at our lowest, the 10-year being at its lowest in about 35 days. So pretty significant reduction, but I think it really just goes to show how eye watering the that ramp up was over the last month or so. But it's definitely nice to see a bit of a cool down there. And has it gone towards MBS? Like we talk about the 10-year all the time. Like have did MBS respond as well?
Yeah, I mean, it's nice to actually have some like a little bit of premium return, but here's the thing: it's not perfect in the ABS market yet. I think we need a little bit of consistency. Granted, we saw a terrible month of October, right? In terms of the rate market. Uh, you know, we're even talking about the 7.5 UMBS, which basically doesn't even trade. It's the only thing that had a premium at one point, really. So, at the end of the day, it's helpful. But with that being said, I would consistently say, and this is something we've been talking about quite a bit, open the rate stack up. You may not have the premium you're looking for, but there is some parts of the rate stack where you're going to have, very
Good
good
deals.
pricing.
Sure.
Exactly. So especially when you're competing with other, quotes, um, you have to kind of think about the cash to close and what your borrower wants. Do they want to pay for a par rate that might not necessarily be what you're competing against? You take a look to see, well, they have 7.5, but my 7.125 is only this much more expensive. That's kind of the game we have to play. When we're on the battlefield. So just continue to open and rip the rate stack. There's going to be times where there's going to be price gains in the rate stack, but it might not be at that one rate you were looking at yesterday. That might not move at all, but you might see some improvement elsewhere, or just maybe outsized improvement other places than the full rate stack. That's just the way the market works. So that's my kind of long call to action. I wouldn't say MBS is recovered and we're perfectly fine, but it improved with everything else. We just got to keep it consistent here. And I think the Fed taking the approach of we're just going to keep it higher for longer, no rate hike threats. That will help. That will help for sure.
Yeah, certainly. It definitely seems to have taken the foot off the neck of the market a little bit here. And again, what we've been wanting is, look, the 10-year right here and MBS where they are. If they stay this way for 3 to 6 months, like, we're golden. That's a great place to be. Somebody posted recently, I think it was Max Franks, a like Instagram post that said, like, interest rates averaged 9% between 1972 and 1991, or some like insane amount of time. And it's like, and the American real estate market was fine then, right? Like, that was a great time to invest in real estate, as always. And like, I'm never concerned with the nominal number, right? The nominal number is reflective of so many different things that, like, yeah, okay, interest rates are 7.5%, but, like, your checking account's paying 5%, and, right, your wages are going up at 5.5%. It's like, that's not that bad. It's when they're like, when you just see this volatility, it seems to be when the client really gets afraid, and when the loan officers get afraid too. So yeah, I think definitely it looks like returning to normalcy. If the Fed finally does, like they've indicated that they're kind of moving towards, finally does say, hey, taking our foot off the gas. We're done hiking for the time being, unless we absolutely need to. I think we'll get some stability, even if it doesn't mean rates go, like, down. So I think we have to stop hoping for the downward trend, and hoping for the, like, just horizontal trend.
No
So with
question.
that being said, any news from you guys in capital markets? On additional lenders, additional products? You got any secrets to spill for those that stick with us for the full 14 minutes here?
Yeah, we're currently we're doing a lot of DPA stuff right now on the back end. So one of the things that we just did get initially approved with was Kentucky housing, which is huge
Woo!
for our Ohio Valley people. So that's something that it's not done yet by any means, but it's one of those things where we're going to get approval and do the training, all the good stuff. So it's a lot of things we have to do in the back end, but those are some of where we're tied up a little bit on that stuff. Also, for those that are in Texas, so reach out to Nate at TLS. Something that we are, having the ability to do a Texas HELOC at the end of the day. So that's something that's rare. Definitely reach out to them.
It is
Um,
rare.
and then and then figure. I've had some people ask. We're still working on it. We are approved, but we have to do a lot of technical things behind figure to be able to get that rolled out to everyone. It's something that you kind of get you on, like, your own, web link. Essentially, it's very
Mhm.
futuristic. It's not your, hey, where's our AAE? I got to call them. They don't answer emails. It's not that. This is blockchain. This is 21st century. We have to kind of get our technology in line before we roll that live. That's very much in the works, and we'll keep that posted as we get that all the way ready to go. But it's something that's still in the works, so keep on the lookout for that. Had some people ask me last week if it's live. Not yet, but close.
Ah, figures.
Ah, there we go.
So, all right, got some Monday morning humor for you. Got some good news on the HELOC front. I can't believe there's a Texas HELOC. I don't really understand Texas and cash out refi, so I didn't think it was possible at all. So, props to the loan store for figuring that out. Good news on the rate market, guys. And it's always a good time to lock. We will let you know the second it's not a good time to lock, but if you got them, lock them. That's what we've learned over the last 12 to 24 months here. Austin, I hope you have a fantastic rest of your day. To all of you guys in TV land, I hope you guys have a fantastic rest of your week as well. If you have any questions about capital markets, how they work, how they move, why they move, or questions about products and best practices when it comes to rates and products and services, please let us know. Otherwise, have a fantastic week, everybody. Thanks, Austin.
Thank you, Sean. Have a great week, everyone.